So let us start with a new chapter, a small area, a theory area for the examinations. For the next coming immediate examinations, you can expect a 5 marks to 6 marks question from this area called as securitization. In the latest trends of our examination, at final level, they are consistently asking around a 5 marks question to a 6 marks question from the chapter called as securitization. Small theory area. If you understand the basics and how it works, chapter becomes very simple and a good scoring area as well. And before we start with it, don't be under a wrong notion that we are going to discuss something boring and just like a theory flow. No, it will be very much extremely practical concept. First 15 minutes only you can understand what is the pace of this chapter, how this chapter has been derived, what is this concept of securitization, who will be there inside this, parties inside the securitization concept. Like this, the introduction itself will be very interesting. Once you understand that, answers become very simple. First point. Point number 1 is, whenever I say chapter like securitization, notion of the student is it's like a theory chapter, boring again. We have to read and go. No. Listen, from the very beginning of securitization concept, there is a logic behind each and everything. First 30 minutes, I will give you introduction as to how the concept came into India. Seriously, I am telling you, if you understand introduction properly, remaining chapter will be completed in another 40 minutes. That much easy the chapter will be. You will only tell the answers, provided you understand introduction properly. Very easy area, conceptually very strong area, exam la compulsory question. All these attributes made this chapter one of the most important theory chapters in our exam. So first, let me give you a fair introduction as to what is this concept of securitization. Please listen. How this securitization actually works. What is the logic behind this securitization? Document relating to the securitization, I already shared in the group. You can take it. The document PDF is available. Totally there will be 9 to 10 topics. Perfectly, if you read all the 10, from that question will come in exam. Okay. Main concepts covering that has been already covered in that notes. Okay. So let us first understand what is this concept of securitization. Before going into that, formally what our study material said. Read on the screen what is there. Securitization involves creation of pool of assets from illiquid assets, being the financial assets such as receivables, loans, etc. This process involves repackaging of illiquid assets into marketable securities. This is what they said. All credit store institutes where they make study material as complicated as possible, such that no one can understand. First thing, creation of pool. What pool? Swimming pool. Very nice. So, creation of pool of assets. So, what is this pool? What is this? Listen here. What is this illiquid asset? What is this financial asset? What is that receivable? And what is this repackaging? What is that marketable security conversion? All these concepts make this complicated to understand, that we are making an attempt today to understand the concept of securitization in its right sense than nonsense. Okay, without giving any proper meaning, if you read, you can't crack the chapter. But if you understand the logic behind securitization, you will tell wah to the government of India for bringing the concept called as securitization. All credits to Shri Manmohan Singh, because during his regime only this concept has come. Okay, because he is a very good financial analyst. Who? Manmohan Singh. Manmohan Singh is a great financial analyst. May not be a good prime minister, may not be, some people may like, some people may not like, that's okay. But may not be a good administrator, but he is a very good economist and a financial analyst. Okay. My point is, listen, that person got one idea. Why not India also implement the concept of securitization? Actually, idea came in 1999. Which year? 1999 la idea came. Idea of what? Securitization idea came. Actually, at the time, Atal Bihari Vajpayee is the Prime Minister. Implementation progression happened during Manmohan Singh. Therefore, credits to both of them. Credit should be given to Shri Atal Bihari Vajpayee, and credits also should be given to Shri Manmohan Singh. Atal Bihari Vajpayee for bringing up the idea of securitization. Manmohan Singh for progression of securitization concept in India. Fast implementation. Okay. With fast track courts. Courts also was formed for this, called as a DRT, Debts Recovery Tribunal. Which one? Debts Recovery Tribunal. One tribunal is formed for this act, called as a Debts Recovery Tribunal. 2016 amendment also made for the DRT Act. Okay. Later they brought one act called as a SARFAESI Act. Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act, did with the Debts Recovery Tribunal Act 2016. So there are two acts also governing this concept. Okay. But what is this concept of securitization? We are not going to read law now. We are going to read the finance angle of securitization. Clear, everyone? How interesting it is. How great the ideology is. Let us try to understand. See here. Before starting the movie, let me introduce you to the characters. Patralu. Persons involved in securitization. Title card started. Ding. Who are all the actors in this movie? Hero is special purpose vehicle is the hero. Okay. Special person. So somewhere in the middle of the story he will come. Movie will not start directly with hero. Movie start with some other important characters. Who are the two important characters? Originator. Loudly. Second. Obligor. Who is that? Who is having a obligation is an obligor. Who originates the obligation is an originator. Okay. Main hero. Special purpose vehicle. Okay. Next, side characters will come. Who always cry. Who is there? Everyone. Very good. Second, next, receiving and paying agent. Receiving and paying agent. Also called as a RPAs. Actually, their name is not RPA. Our study material generally use that. Actually, they are called as servicers. Called as, why name has come, everything we will see when we come to the concept. Next one. Agent or a trustee. Loudly. Agent or a trustee. Next one. Structurer. Who is this structurer? He is the director of this movie. Who? Structurer. Structurer is a director of the movie. Sir, why, sir? Tell me, who decides the characters? Who brings all the characters into place? Structurer is a director. He only bring originator. He only bring obligor. He only put the special purpose vehicle. He only do all this work. Who? Who? Next. Credit enhancer. Who is this? Comedian. Next one is whom? Rating agency villain. Because they only will give the credit rating. They give? Tell me, who are all the characters in this movie? Number one? They loudly. Second one? Obligor. Third one? Wait. Number four? Investor. Number five? Receiving and paying agent. Hey, don't let them. Receiving and paying agent. Next one? Agent or a trustee. If you shout like that when real concept starts, happily you will sleep. Next one is structurer. Next one, credit enhancer. Last one will be rating agency. These are all the various persons about whom we need to learn. Okay. Here I am not there in this movie. Oh, that's why you are shouting, huh? Somewhere in the movie, heroine will come. No, no heroine in this movie. This is a hero-oriented movie. Huh? Sir, okay. Listen. Sir, listen. There is every chance that characters can be male and female also. Then why separately you require heroine? Listen. Sir, okay. Listen. 1 second. I'm very sorry for taking the example. You spoiled everything. 5 minutes you wasted the timer. Tell me, all these people are various parties involved in securitization concept. Remember, every character whom you are seeing on the screen will come some or the other way and influence this concept called as securitization. How it works, let us see, try to understand. First one, if you understand this properly, very next chapter after this, I mean, parallelly with the options, chapter 1 is completed, swaps we will start. Which one? IRRM actually, interest rate, risk management. There also these people will come. We will understand in a different way. Okay, so please listen carefully. This is a linking chapter type. Originator, obligor, special purpose vehicle, main characters to understand. Influencing characters, investors, I am very sorry, investor. Receiving and paying agent, trustees, structurer, credit enhancer, rating agencies are subordinates to all these main characters. Okay, let's understand who are they. Before going into that, why this concept has come? I will ask you one question to everyone. Try to answer this. Maybe you are maybe whoever working at your home, maybe you or your parents or your cousins or brothers, siblings, everyone. Whoever is working and having a credit card or debit card, whatever the case may be. Maybe you also. Have you ever got a call from a bank? We are giving you pre-approved loans. Have you got the messages? Or have you got a call? When you lift the call, computerized calls will come. Hello Koushik, you are eligible for pre-approved loan of 10 lakhs. I want to make you bakra. Like that. Messages will come or not? Seriously, like this, in this tone only will get calls. You will lift the call. Hi Koushik. Like this one message. Computerized lady voice. You will talk also with them. Please, inkoncham సేపు మాట్లాడు. Sir, listen. Listen. I can understand your problem, but it's a computerized call. So listen, they will make the calls. But really, situation if you observe, whenever you get a phone call relating to that, have you ever got a call? We are giving pre-approved loans. Yes. Maybe student may not get because pre-approved loans will be coming only once your income tax returns are filed. If you file income tax return, your information will be there in the website. Your PAN number will be checked. Through that they will get the information, they will call you. Your income is, say for example 5 lakh per annum. Example, they will tell 80,000 pre-approved loan is there. Do you know what is a pre-approved loan? Without any documentation, without any income tax return, directly they will give 80,000 loan. That's called a pre-approved loans. Means no approvals required. Already approved. Just you need to fill one document, you will get the loan. That's called as a pre-approved loans. Depending on your income status, they give pre-approved loans. I get every day at least 5 to 6 calls. When I lift, they will call, they will tell there is a pre-approved, or I will get messages. This is, one second, please don't divert. This is a situation. Maybe you might have got messages also. Now I will ask another question. Have you got messages or calls relating to taking a credit card? Answer, yeah. Everyone might have got a message or a call, take our credit card. Sorry. When you go to shopping malls, people will come. Do you want SBI credit card? Do you want HDFC credit card? Like that, people will come and lure us. They will tempt us. They will stand in shopping mall. We will see one product. They will be ready with credit card. That's why all these people stand in shopping malls first. Why? In shopping mall, if you go, we will get tempted to buy something, but we don't have money in pocket. One person is saying, hi, I am there. I am talking about credit card today. Muttal. So, so they will be ready with credit cards. They will tell that, please listen. Please listen. There is a HDFC person standing there in a counter. He will call us. Sir, we are offering HDFC credit card just with online approval. Just give your PAN number and certain details. We will give you credit card. Listening. Okay, checking your civil score online. We will give you issue a credit card. 2 days it will get activated as well. If I say I already have credit card, they will tell we will upgrade. If you are using some X card, they will tell we will upgrade to Y. Like that, they will make it more lucrative process. So from all these things, there is one common thing. You know what is it? They are always asking for credit only. Have you ever got a call from any bank in India? Please deposit money in our bank. Please open savings bank account in our bank. Have you ever got a call? I didn't get the call till date in my life. I never got a call from any bank or any person. Please open bank account in our bank. I never got. But I got every day 6-7 calls saying, do you want credit card? We are ready to give credit card. What is the operation of a credit card? You buy, for you I will pay, you pay me after 50 days without any interest. Are you understanding? How come you are doing all these things here? Never you ask for a deposit. Always you will ask, I will give loan, we will give credit cards. What you will get after doing that? Like this you should get doubt first. Why banks never ask for deposits? Listening everyone. Why they always ask for borrowing? I mean, why they always tell we will give credit card, take credit card, use our money, pay later, no interest, interest free, no processing fee. Who are you? Eh? You are my niece or nephew. Why you are doing all these things to me? First you should get that doubt. When you don't get that doubt, you don't have right to read this chapter. That doubt raised to a chapter called as securitization. In India, if banks are not interested to accept deposits, but they are interested to give borrowing, that's just because of this chapter. Chapter means, concept. What is the concept name? Securitization. How it works is the situation now. Listen carefully. Please listen. So, the premise on which this concept started is securitization is the name of this concept. Let me first explain you one point. In our discussion in the last 5 minutes, what I said, banks are not interested in, unless you take deposit, how can you give loan to some other person? Be in this world. Unless you take money from me, how can you disperse money as a loan to some other person? Are you understanding or not? I will give you another example. Yeah, I will give another classic example. Have you ever seen NBFCs? NBFCs. NBFC have you seen? What is the NBFC? Full form illa. Full form illa. What is an NBFC? NBFC ki bank ki what is the difference? Bank accept deposits and lend money, but NBFCs will lend money and take back the money with interest. Correct or not? NBFCs you see, okay, NBFCs, their intention is to lend money. Where you are getting it without taking deposit? How you are getting money? Question number 2. How the financial markets are working in India? Just because of securitization. It's a boon for financial markets throughout the world as well as in India. How this works, let us try to understand clearly. See here. First question everyone understood. Bank never craves for? Never. You go to the bank. Anyone came to you and said, please open savings deposit with us? Not even single person will ask you. Do you know why? You don't open. Namaste. Don't come to the bank. Take loans we will give. Take credit cards we will give. But we don't want your bloody deposit. In that account you don't maintain even 120 rupees. So please don't open. Listening, you will maintain 100 rupees, 30 rupees, 40 rupees, phone pay you will maintain. So we don't want you. Banks will always really feel that, Babu, for you, a big namaste. You don't open bank account with us. No problem. Take loans, we will give. Take credit cards, we will give. We will torture you by phone calls. Please take loans. Don't open deposit with us. We don't want your money. We will give our money to you. Pay interest on that. Tell me, in this entire episode, what is advantage to the bank? Very bad answer. Interest is a worst answer actually. Do you know why? Really, if I want interest, if I have some money with me, this money I will give to some other person. So without accepting deposits, from where I am getting money? They are not interested in deposit. If you do articles at the time in any of your clients' balance sheet, if you see loan from bank 1 crore, deposits, I mean cash in hand 1 lakh also will not be there. Correct? Latest 2022-23 RBI released a bank audit report. Overall, April bank audits will be conducted. Bank audit they released a report. Okay, what report? What is the ratio of deposits and borrowing in India? Deposits and borrowing in India. For 1 rupee deposit, how much borrowings are made? Latest 2023 ki 1 rupee deposit ki borrowings are 33. Means what? If 33 rupees is taken by public, 1 rupee is deposited. 1 rupee is? You see any balance sheet of your client, 30-40 lakhs loan will be there, 1 lakh cash will be there. Correct? From that only you can understand what is the ratio of deposits and borrowings in India. Listening. From this, what you have to understand, bank gets how much? 1 rupee. Gives how much? Who you are working here then? On your 1 rupee, this 1 rupee you should give. But from where the 33 came? That's always a $1 million question mark, which should be answered. 2002 before, banks used to crave for deposits. They used to beg the people literally, please make deposit in our bank account. Bank used to send people to home. If you open in our bank, we will give you 7% interest. Other banks are giving 6 like LIC. They used to send people home. Deposit when bank manager used to come out of the office. He used to tell, please deposit. Make a deposit in our bank. Now they are not caring about deposits. After 2002. How this happened? What is the so much great things happened in India? Let's understand. Will we start now? Now listen. Bank is there. Banks are giving loans. I started a bank today. KBI, Koushik Bank of India. SBI is KBI, Koushik Bank of India. So listen. KBI I started. Listen. In my bank, all of us are promoters. Whatever this 70, 100 students, whoever are there here, all of us are promoters. Means all of us will put the initial capital. Okay? I kept 100 crore. You kept 10 crore. Like that, everyone kept the money. Totally, our KBI raised 1,000 crores on day 1. How much we raised? How much? One person came to the bank after starting it. Okay? Our Johnny came. Johnny came to me. He said, who is the manager? He asked. I said, sir, I am the manager. Johnny, don't tease him. Johnny immediately said, he said, do you know who I am? He said, hey, listen here, Johnny Walker. So I asked, no, promoter. Main person leaving. So okay, in his absence, I can take good examples. See here. Hey, listen here. Johnny came to me. He asked me, I am a very big builder in this city. He said, I said, hey, listen here. He said, I am a very big builder, real estate. I am a very big realtor in the city, he said. I said, okay, sir, thank you very much. Please have your seat. I asked him, so for what you came? He said, I am constructing a very big venture. For that venture, I need 600 crores loan. That's a 1000 crore project. 400 crores I am putting. Remaining 600, I want a bank loan, he said. Immediately, we said, sir, rate is 14% interest. Are you okay? He said, okay, no problem. 14% is okay for me. But I want loan immediately in another 10 days, he said. Yes, sir, we will disperse the loan. Give your details, company details, all the details you give. Past track record, you have taken loans now. I will check that details and I will sanction you the loan in 10 days. Johnny came to me. We sanctioned 600 crore. No answer. All our promoters raised how much? In that 25% is the statutory liquidity. You should keep it. You should not give as a loan. Everything if you go, adukkud into the bank. So at least 250 crore we should keep in reserve. How much only can be disbursed? 750. In that 750, Johnny taken how much? Gone. How much is there still? 150. 600 crores jump. One go light went. That 600 crores will come back to me immediately. Small bits and pieces. What is the name for that bits and pieces? Installment. Maybe I get 1 crore after 1 month, 2 crores after another month. Like that I will get. How much went out? Directly swish. 600 crores went. Light amount of 1 crore, 1.5 crore per month. Like that it is coming back. When I have to recover that 600, payback period will be somewhere around 10-11 years. Now tell me how bad the position of banks is. Money will go out in one go, but it will come back in bits and pieces. Listening, if this be the case, I can sanction only how much now? 150 crore. 150 crore in a city, at least every day, minimum 100 people will take home loan. At least. In a big city, okay, like Hyderabad, etc., at least 100 people will take bank loan every day or not, housing loan. At least every housing loan in city like Hyderabad, Chennai, 1 crore is minimum cost you need to spend. 100 people if they take loan, 100 to 150, your bank becomes cashless. Understood the problem or not? Now tell me, what is the problem faced by the banks once upon a time? Whenever they have to give the loans, loan will go in one set, but come back in bits and pieces of installments. Because of this, liquidity crisis started. What crisis started? Hey, be here, everyone. What started? Huge liquidity crunch started in India. Banks are not in a position to cater the needs of everyone. Therefore, if you observe, 2006-07 after, India housing revolution started. What revolution? Housing revolution means what? Every person should have security of a house. Food, clothing and shelter. Food is must. Shelter is must. Clothing is must. After the third rank to what? Every person should have their own housing with whatever the budget he has. That's why government of India reduced the interest rates as well. Understood? Banks are not ready. Why? Money is not there. You wanted to encourage housing industry. They will come. My bank has 1000 crore. I gave 600 to one person. 150 is there. 200 people came. Gone. My money is not there. And liquidity will not be coming back in the near future also. Listening or not? I take 1 crore loan. Yeah, I will pay 1 crore next month. 1 crore 20 years I will pay. How many years it will take for the bank to recover back? So my 750 crores after the statutory liquidity ratio, my 750 crores will come back to me in another 15 years. But in the meanwhile, what should I do? Problem started like this. Are you understanding? There is a necessity to bring some solution or a remedy for this problem. Thereafter, they got an idea. Whenever bank finds that there is a liquidity crunch, okay, they should give a chance to sell their assets. Sell their? I will give you an example. Tell me. Manufacturing companies are there. Listen properly. Manufacturing companies are there. Stock is there on go down. stock has to be sold, money has to come. Correct or not, everyone? What is the ordinary course of business of a manufacturing company? Manufacturing finished goods, selling in the market is the ordinary course. Correct? Now tell me, I have 1,000 crores cash, manufacturing company. Listening? It invested in plant and machinery and raw material. Raw material converted into work in progress converted into finished goods are in the stock was sold. Then only cash will come back. That means liquidity to a manufacturing company will come if I purchase raw material, if I use in work in progress, if I convert into finished goods, if I keep that in go down, if I make a credit sale, if I convert the credit sale into cash. This is called as an operating cycle. This is called as what cycle? Operating cycle is a time taken for conversion of cash into cash. Operating cycle is a time taken for conversion of cash into cash. Started with cash, converted into raw material, work in progress, finished goods, debtors, sale, debtors, cash. This cycle is called as operating cycle, also called as a working capital cycle. Correct, everyone? Tell me, sale of sale of finished goods stock is an ordinary course of business or not? Like that, for a bank, what is the ordinary course of business? Giving loans, taking deposits. Correct? But where is the chance for bank to sell the loans? Happily, all manufacturing companies are buying raw material, converting into finished goods, they are selling, getting the cash back. But for a bank, do you understand? Trading company is there. Which company? Sir, my company is Hyundai. Trader, not manufacturing of Hyundai. I am a dealer. What I will do? I will give money, buy the cars, sell the cars, get money. Over. Listening. I am a dealer in Apple phones. I am a dealer in Apple phones. What I will do here? I will put 1 crore rupee. Purchase 100 phones. How much went out? How much I have? 1 crore. How much I have? 1 crore cash. 1 crore cash I kept in the market. Over. How many phones I purchased? Answer. 1 crore fact. Liquidity or no liquidity? I want my liquidity back. What I will do? Sell the phones, get your liquidity back. Listening? As simple as that. Vehicle persons are also doing that. Big manufacturing companies are also doing that. They are taking money, putting in raw material, converting into finished goods, selling it, getting cash. But where is the chance for the banks? You can't do that for a bank. Banks are getting money. Listening. Like how you are converting that into current asset. How you are converting into current asset means ordinarily trading item of a company is a current asset. Like a current asset, for a bank the current asset will be the loans and advances. They are giving loans or not? Answer. Bank give loan, it is asset or liability. For a bank, it is asset or liability. Receivable or payable. Now you answer. Asset or not an asset? Ordinary course or not in ordinary course? Ordinary course. Tell me. Raw material for a manufacturing concern. Ordinary. Raw material means finished good. Goods for a trading concern. All are ordinary course or not? Liquidity gone. What they will do? Sell, get back money. Sell, get back money. But where is the chance for like that for a bank? Therefore, like this it started. Read. Banks gives what? Loans or financial assistance. To whom? Institutions, individuals, they will give. Money goes out at once, fast. Money goes out, but return back in bits and pieces in the form of installments. As a result, banks and financial institutions faces liquidity crunch. Banks or financial institution wants to get back their liquidity. This is the problem. Every problem should have a remedy or a solution. Remedy resulted in a new problem. What is it? To overcome this problem, what they have to do? Like how we are selling the phone and getting back our liquidity, bank should be allowed to sell their loans and get back liquidity. So tell me, bank has cash? Normally bank has cash. Cash is asset or liability. This cash is converted into loan. Loan given, a loan taken. given. So cash is an asset converted into another asset called as a loan. But this is cash, not being cash. My cash is blocked in that, correct? Now tell me, take a manufacturing company. Cash is there or not there? There. Cash converted into finished goods. Finished goods are sold. Listening? Bank. Bank gave money. Bank has cash. Cash converted into loan. Loan can't be sold. Therefore, why problem started? For a phone, gadgets, electronics market is there. For vegetables, vegetable market is there. Seriously, I am talking. Seriously, listen. For electronics, gadgets is there. For stationery market is there. Every product in the world has two markets. Primary market, secondary market. Primary market is like manufacturer. Secondary market is like retail market. Phone manufactured by main company. They will sell to distributors and retailer. Retailer sells to public. Clear or not, everyone? Likewise, listen. I manufactured goods. Product ready. Cash is blocked in that product. What I will do? Sell the product, get the cash. Like that, banks also got the cash, converted into loan. Now the loans has to be sold. Vegetables ki vegetable market. Shares ki stock market. Listening? Electronics ki electronics market. Like that, where to sell the loan? I can't go to vegetable market and tell, please take my loan, I will sell you the loan. For the first time he will listen that word. Listening? People don't know that loans can be sold. Understanding or not? Johnny, you know? అప్పులు అమ్మచ్చు తెలుసా? అప్పు తీసుకుంటావు కదా, అమ్మచ్చు తెలుసా? వినండి ఒక్క నిమిషం. ఫోన్ అమ్మచ్చు తెలుసా? We can sell phones. తెలుసా? You can sell phone. Okay. You can sell a mouse. You can sell a keyboard. You can sell iPad. Everyone know about it. But there is another market called as selling of. That market people don't know. Because there is no awareness of a new market called as selling loans. It will be weird if you tell to someone. But there is a market like that. That's called as securitization market. Okay. First point number 1. Bank has given. Money went out immediately but came back in. Because of that, liquidity problem came. To overcome that liquidity, bank has to sell that. But this is difficult. Why? Due to lack of liquid secondary market. Share ki share market, phone ki electronics market, vegetable market. There is a place to sell. Loans where to keep? Sit on road. I have loans. Who is ready to buy? How can you tell? You can't. Problem is there is no solid secondary market for it. Are you understanding? Create a secondary market. That's how the title of the movie started. Then came the hero. Who is that? Securitization. This is introduction to this character called as securitization. Everyone understood the point up to here clearly? So, what is the motive behind this particular chapter? Where it started? There should be a market to. Very bad response. There should be a market to sell what? Loan is an asset, not an asset. For a bank, loan is what? Fixed asset, current asset. Financial asset. Separate world is created for them. That's how India is 107 and 109 came. Financial instruments. In that only this is covered. Listening everyone in the class? These are all financial assets. It's not fixed asset. It's not current asset. Bank sells financial assets. Listening? Surface. Securitization and reconstruction of financial assets. It's not current assets. It's not sarcasy. It is what? Surface. FA means what? Financial assets. It's not current assets. Listening or not? Tell me, loan is a? For a bank, loan is a. Thank you very much. Up to here, understood everyone? Now, this is the main diagram to understand. Insured materials also have given, but they didn't explain it in a proper way in which it has to be. So I made an attempt to explain the full story of how this securitization actually worked in India. See here, I will explain in new diagram format. Apply this, listen carefully, see the process. First, banks or financial institutions, please listen, banks or financial institution will give loans to the borrower. Listening? Because of giving loan to the borrower, money is blocked. Whose money is blocked? Bank's money is blocked. Loan is a fixed asset, a current asset, a financial asset. 100 crores loan is given. How much? 100 crore loan is given. Please listen carefully, or else you can't understand. Please. Bank gives loans to the borrowers. Financial asset. Money is there, money is blocked. Money is blocked. They have to buy a sell. Sell furniture, land and building, financial assets. But there should be some market to sell. Correct? Electronics ki, vegetables ki, really shares ki, stock market. Like that for loans ki, securitization market. Which market? Market. How it apply? Let's see. See the screen. Flow, if you don't understand, no one can save you in understanding the concept. Please listen carefully. So many times I also can't tell. So bank gives loans to the borrowers, creating a financial asset worth 100 crore. They wanted to sell. There should be some person to buy or not. There is a person called as special purpose vehicle. What is that person? Special purpose vehicle. What is this special purpose vehicle? This person is a trust or a company. Societies also are there, but rarely, mainly they can be either a trust or they can either be a company. Companies are called as ARC, Asset Reconstruction Company. Everyone repeat. ARC. Trust means they will call it as a Asset Reconstruction Trust, also called as a Securitization Trust, also called as. What they will do, let us see. See that. Who gave loan? You will explain entire process now. Who will give the loan? Bank gives loan to whom? Out of fund, in the funds. Out, bank became in the funds, out of funds. It don't have funds now. It has to buy a seller. Sell what? Loans or financial asset. It will sell loans to a person called as a special purpose vehicle. Okay. It will pool, packages and transfer. Three things will be there. First one, sir, what is this pooling? There is pooling function, packaging function, transferring function. Three different agreements. What is a pooling function? Listen, very, very important. These are called as a trench. T-R-A-N-C-H-E, trench. Trench means a batch. Let me explain how it works. All vehicle loans will be pooled ones. All home loans will be pooled. All commercial loans will be pooled. All general corporate loans will be pooled. In India, there are around 18 to 19 different types of loans are there. Are you listening or not, everyone? 18 to 19 different types of loans are there. Okay. Means what? Housing I can take a loan. Commercial I can take a loan. General corporate purposes I can take a loan. Vehicle I can take a loan. Education I can take a loan. All these loans are having same level of risk at different level of risk. Shall I tell you why? Which is least risky? Housing loan. Do you know why? House is security. If you don't pay, I will sell that. Vehicle, same. Vehicle is security. But vehicle loans are risky because vehicles depreciate very fast. Vehicles depreciate very fast. So, least risky is the home loan. High risk will be commercial loans. High risk will be commercial loans are very risky. Okay. That's why one separate chapter came in Companies Act called as registration of charges. Registration of charges. Sorry, okay. This is not time to discuss about charges. Please listen. Mortgage concept, you know, means security. Listen carefully. This chapter name is what? Loudly. Securitization. This logic or this concept is applicable only for secured loans, not for unsecured loans. That's my name, securitization. This chapter does not apply for unsecured loan. Your loan must be in order to get attracted by this particular concept of securitization. Unsecured loans, this chapter don't apply. Everyone understood the concept here. Now, let's start the story. Point number 1. Who gave loan? Gave loan to whom? In the fund, out of funds. Buyer, seller. Fixed asset, current asset, financial asset. Financial asset it wanted to sell. Now, there should be some person to buy it or not. Who will buy? I will throw. Who will catch? SPV will take the catch. They will tell that, okay, you sell it to me. I will buy. Okay? Now, what happens is, see here. When we get a problem, we go to God. We'll ask, do something. God got the problem means? To whom he will go? God is a day. See here. Sir, okay. Again, you are diverting the concept. Listen. When we got a problem, when we got a financial problem, we go to bank. Now, problem doesn't come to public. Problem came to whom? Who is there to save the bank? Yeah? Who is this SPV? Who is this Topesh? How he is getting money? Hey, if we get financial problem, we go to bank. Bank is in trouble means this person is saving. From where this fellow will get money? That's a top-notch point you need to understand. He also don't have. Okay, he also don't have. How this process works is the beauty of this securitization. See the screen. Who gave loan? They wanted to sell a buyer. Fixed asset, current asset, financial asset. They will pool. Pooling means what? All loans belonging to same risk category, same maturity time, same type of nature, all are pooled into one package. They will be brought into one set. Pooling. Packing into one bundle. Listening, then throw. Who will catch? SPV caught it. Okay. Now the top-notch point will start. What is the worth of these loans? Answer, yeah. What is the worth of these loans? Let us say ours is a home loan in our example. What is the worth of the home loans now? Everyone? Wrong answer. 100 crore is a principal given. Bank will take back principal with interest. All EMIs will be there in the future. Calculate a present value. That is the worth of that loan. That is the... How much principal I have given? What is the principal I have given? Yesterday I gave you an example in the class. Bank will give you a loan of 1 crore. It will recover from you 1 crore, right? It will recover more than 1 crore. At a meager interest rate of 7%, we got 1 crore 84 lakhs in the class. Means they will give 1 crore, means they don't get back 1 crore. They will get back more than 1 crore. Correct or not? Now, there will be SPV. Whenever bank felt that liquidity is reducing, immediately they will sell the fair value of this loan. What value? Fair value of this loan. They will sell. Okay. Fair value, how to calculate? Present value of future cash flows, discount rate, required rate. Present value of... What are the cash flows on this loan? EMI. Present value calculate. You will get one value or not. Example, let us see. They sold rupees 180 crore worth loans. 100 crore is the worth of the loan is present value, future value, present value. Present value 180 crores. Okay. This much amount they will sell. Sir, how come SPV is having that much money to pay you? SPV also don't have. What SPV will do is, it will go to another person. Rather, persons it will go. These fellows are called as investors. Who they are? Also called as QIBs. Qualified Institutional Buyers. Everyone, qualified. Who will be there in QIB category? Mutual funds, insurance, provident fund, PF, all these other banks will come. I will give you an example. Every month, every CBT, not CBDT, CBT, Central Board of Trustees, pension fund holder. India la pension, provident fund, yes, all these are coordinated by one department called as CBT, Central Board of Trustees. They will take care. Every month in India, in the form of pension and provident fund, government is collecting 30,000 crores. How much? How many crores of employees are there? How much is their salary into 10%? Employer contribution or employee contribution? Both put together we will deposit. Around 30,000 crores of provident fund is collected every month by the government of India or not? 30,000 crores when I collect, that is a money belonging to government, a money belonging to employees. You have no right to misuse that fund, correct or not? That becomes the biggest scam in India if they do. Therefore, they wanted to park that amount in a safe place. 30,000 crores every month means per annum. You imagine how much money is getting accumulated. Idle, not idle, idle. Somewhere they have to keep. Those people are the participants here. Listening or not? They will be participating in this bidding process. Okay, they will subscribe. What they will subscribe? Tell me, how much is the fair value of this loan? 180 crores worth. At some face value, they will create a document called as pass-through certificate or pass-through security or security receipts. Repeat what I said. Any name you can call. Listening or not? Tell me, how much worth? Let's say par value 100 rupees. Par value 100 rupee par value. 100 rupee par value means they will issue 1.8 crore security receipts. How many crores? Loudly, everyone. Worth what they will issue? Security receipts. For example, I am HDFC mutual funds. What I will do? I will subscribe for 1 lakh security receipts. I will subscribe for 1 lakh security receipt. 1 lakh security receipt means how much? 1 crore rupee I invested. Each security receipt cost is how much? 100. How many receipts I purchased? 1 lakh. 1 lakh into 100? 1 crore. In this 180, 1 crore came from mutual funds. Example I am saying, like this thousands of participants are there. You also can participate. But our thing is small scale. Big banks are participating on mass scale. Clear? How much we are getting money now? Answer, sir. Who is receiving 180 crores? SPV will receive 180 crores. SPV will not keep it in its pocket. It will immediately transfer all these amounts to whom? Bank. How much amount? 180 they will not give. Charges they will deduct and they will pay the balance. Say for example 175 crores they transferred. Not listening. How much they will transfer? 175 crores. Listening everyone in the class. Tell me how SPV got money? They issue. What they will issue? Also called as pass-through certificate, pass-through security. Other important question in exam. What is the difference between PTC and PTS? Other exam question. So you can call it PTC, sometimes PTS, but both can be called as security receipts. Sir, why sir they call it security receipt? This particular instrument, whatever SPV issuing to the investor, is in the nature of debt. Is in the nature of simply debentures. Simply debentures regularly will get. Bond valuation chapter we are doing. If you get the doubt now, with this I will hit. Tell me, debenture will be paid regularly at the end redemption. Means regularly what they will pay? Interest. End what they will pay? Why sir? Why not equity share? Why only debt? Question will arise. Correct? Huh? Tell me, I sold what? Loan has a term. Equity don't have a term. I should convert that into such instrument which also have a life. I can't convert into equity instrument. Listening or not everyone? That is one reason. There is another good reason for that. That I will discuss much later. See the screen now. Tell me. What I issued? What I issued? To whom? They are taking a risk or not? No. Because these securities beauty is they are MBS. Mortgage backed security. Loudly. Do you know what I mean by that? For their debt debentures, security is security what the main person has given to the bank. I told you at the beginning itself, this chapter will apply for unsecured or secured. All our home loans or not? Home loan ki home is already in security or not? Answer. If at all a day comes, as of now India never that day came. If at all a day come where if the investors are not getting their interest and principal properly, backing of what is there for them? Asset loan. House is there, asset is there as a security. They will sell that and get their money. Means they are secure or not secure? Safe or unsafe? That's why pension funds, provident funds, mutual funds are involved in this. They don't take risk. Listening or not? That's why they will get interest. In India, security receipts are getting interest of 5.7%, 6% like that they are getting. You may ask, sir, 5.6% is very low, sir. Very low. If you keep it idle, that also will not come. Are you understanding? I collected money. I want return. Who is giving you 6%, 7% return? They can't keep in FDs. They can't keep in. Do you know why? FD means money is blocked. Security receipts are tradable documents. You can sell them whenever you need. That's why I call it marketable security in the introduction. Listening or not, everyone? They are marketable. That means can I sell or cannot sell? Now you tell. After your bond evaluation knowledge, market la YTM changes. Market la YTM reduce. Yeah, market la YTM reduce means automatically value of the bonds will increase or not. That's all. The security receipts gain value, they will sell. Some other fellow will buy. Listening or not, everyone? That's how the money is raised. So now tell me, fastly, who gave loan? Gave loan to? Gave loan to. Money, out of money, in the money. I sell to all loans randomly, pooling. All common loans pool, package, transfer. To whom? SPV don't have money. How he will get money? To the fair value of that he will issue the security receipts, also called as PTC or PTS. Get the money. Those are normal mortgage backed securities. Or asset backed securities people call ABS or MBS. Anything is right. Okay. They will issue. They will get the money now. Listening? Money will be passed on to whom? Not answering. Money passed on to whom? Tell me. Left hand, right hand. Bank gave with left hand how much loan? Not answering. Bank gave how much loan with left hand? How much it got in right hand immediately? That's why they are crying, I will give credit cards. Today I gave 100, in another 1 year I am getting 180 crores, means what do I need? That's why they are telling you, you want loan, do you want loan, do you want loan, we will give credit cards. Prepaid, pre-approved loans are there. Please take our loan. Interest illa. Why they are so interested to give without interest? Money is idle with them. That's how banking markets are running today. Are you understanding? So who is the god for all the banks today? Securitization. The SPV mainly securitization. Listening? Now question, sir. Why SPV, sir? Bank only can do that. That doubt also some people might have got. You should never get that doubt. Do you know why? Buyer and seller can't be same person. Oh, bank will give loan, bank only will buy. Can that be done by same person? That's why we need secondary one. Another person is required. Listening or not, everyone? Tell me, SPV. SPV is a car. It went to whom? Investor. Take the money, dump into that car. That car again came to bank. It's a vehicle or not? Physical vehicle or financial vehicle? That's why name came as a special purpose vehicle. That special purpose is pooling and packing and transferring. That's how the name came as a special purpose vehicle. These are called prominently in India as securitization trusts. Income tax law you might have read. Section number 115 TA, 115 TB, 115 TC. These three sections are governing the concept of securitization in India. Am I clear? You might have learned all these things in tax also. Entire concept, whatever I said now. Securitization? Securitization trust. You might have heard all these things there. You might have learned all these, whatever I explained now. So, The main concept is understanding about the background of how securitization works. Up here, everyone understood clearly. Now, problems started like this. Recourse and non-recourse agreements started. All these are questions in exam. Overaction cheyakunte chala baguntundi. Recourse and non-recourse agreements. What is this recourse and non-recourse? Non-recourse is also called as a sans recourse agreement. What is it? Sans recourse. Negotiable instruments, you might have heard this word. అసలు అదే వదిలేస్తుంటే ఎప్పలం శ్రీ పరమేశ్వర అర్పణమస్తు. Danno. So there is a concept called as a recourse and sans recourse. Sans means no. Italian maxim. Latin lo they use the word sans means no. Okay. Sans recourse means no recourse. Recourse means coming back. Is called as a recourse. What do you mean by sans recourse? Let me explain you the concept, please. Listen. Another 10 minutes we'll go into the answers. If you read the answers, it will be as if like re-explaining the concept. That much easy it will be. So please listen carefully. What is this concept of sans recourse and a recourse agreement? Who sold the loans? Huh? Kada? Bank sold loans of borrowers to some other third party. He, on the basis of that fair value, issued securities. Tell me now, SPV has to pay regular interest and regular interest to the mortgage-backed investor securities or not? From where they will get money? No. You got money, you transferred to the bank. Bank job over. Now who should pay regular interest to them? SPV has to pay. From where it will get money? It has to recover EMIs from borrowers regularly now. Who has to? Answer. That's why a person came called a servicer. Previously, I shown you RPA. Have you seen or not? RPA means servicer. Who is the servicer? Butsin batch. Butsin batch. You watched a movie called as King. In that, what Butsin will do? At the same, exactly. These people will do the function of recovery agents. What they will do? Everyone? What they will do is dhamki business. Borrower, they will go to whom? They will go to whom? Collect what? Collect what? EMI. AMI. So what they will collect? Everyone. So they will collect EMI. So now EMI lo two parts are there. Enna peranna? What are the two components? Principal and now tell me. SPV will issue shares, issue security receipts in the form of debt. Reason one I told you. Reason two, do you know? This debt also has what and what? Principal and interest. Such that this EMI interest portion pays interest, principal portion pays principal. That's how they will manage this concept. Are you understanding the point clearly or not? Tell me now. Answer. EMI two parts are there. Number one. Number two, you issued equity shares are debt securities. Debt securities also will have two parts. Number one, principal. Number two, interest. Number two, principal will go, interest will go every year. Principal will be paid because both are of the same fair value. The amounts also will match. Small mismatch will be there, that they will take care. Listening or not? Now the concept started. Recourse, sans recourse means if borrower committed a default. Who committed? Committed a loudly borrower. Then who is responsible is a question. Who is the risk taker is a question. If borrower becomes defaulted, again loans will go back to originator, being a bank. Again it will go to bank. Again it will go to bank. Will take the risk. Bank will take the, in case of pass through securities. In case of If it is a pass-through certificate, already I gave you certificate, you are the owner. Risk and reward passed to investors. It's called as a non-recourse agreement. It's called as a, which is risky? PTC या PTS? Answer? That's all. Because PTC la risk and rewards are also transferred to whom? Investor. Transfer to whom? Investor has to take a decision as to how to proceed towards the defaulter, how to sell asset. For them, SARFAESI Act has come. NPAs. For NPAs only SARFAESI Act came. If all this concept is completed, if this borrower becomes NPA, what to do? Then SARFAESI Act started. That's the introduction to SARFAESI. Climax of securitization is the introduction to SARFAESI. Understood the point or not? So therefore, understood the concept, everyone. So tell me, borrower committed default. PA na NPA na? Performing asset or non-performing asset? We should take some action against him or not? Answer. What is this concept till now? Securitization we read. What we read? Means everything is positive till now. If this borrower committed a default, who is responsible? If it is a recourse agreement, who will take care? Bank will take care. Then they will issue pass-through certificate. Means you are only just an investor of securities. You are investor of PTC, you are investor of the risk. Investor of? That's the returns also will be more in that. More risk? Simple logic. More risk, more return. That's why PTC returns are 6.17, 6.25 like that. PTS will be 5.2, 5.1 like that. Listening or not, everyone? Obviously, more risk because obligation is more in non-recourse. Understood? Recourse means you can go back. Non-recourse means you can't go back. PTC applies for loudly non-recourse. PTS will apply for recourse. PTS is just like any other investor. Any other? Debenture holder will take risk, will not take risk. PTS work like that. PTC is like an equity holder. Though security is a debt security, it's like an equity risk type. Something wrong happens now, you will take the risk of loss. But in case of PTs, yes, who will take the risk of loss? Bank will take the risk of loss. They will compensate to the investors. They will compensate to? Sir, bank where it got money? 180 crores. Isko dinesh hoga. Are you understanding or not? You have already made it. So therefore, from that only you compensate our risk. Tell me, risk passes on to the investor in case of? Risk will be recourse to the bank in case of? Other names of bank is originator, who originates the loan. Other name of borrower is a person having obligation called as a obligor. Special purpose vehicle. Special purpose vehicle, investor, investor. And this person is called as what? Servicer. If you remember, I shown you one word, RPA there. Receiving and paying agent. He will receive EMI and pay to the SPV. SPV will disburse the interest and principal payments. This is the concept of securitization in India. Everyone understood the concept clearly? This is how the securitization process works. See that? Seeing this, let us understand one last time and then go to the answers. You should now tell who started everything. Bank or financial institution is also called as originator. Originator gives what? Called as financial assets or assistance. Okay. Say how many crores? 1000 crores example I have taken. 2100 crores came back to us. Listening? Because 100,000 crores, 1000 crores we will take. Then what is the purpose of giving loan? I gave a 1000 crores loan. I took 1000. Then what is the use? How much loan you have given? How much you got back? Normally 1000. Then why you have given? Adhe 1000 joke, just for fun. Sir, like that the banks will not do unless and until there is some benefit. So see there, borrower is a obligor. Okay, they will now see the left side mark. Bank will pools and transfer financial assets in favor of whom? SPV. Worth how many crores now? 100 crores. Dotted arrow mark is there, na? SPV issued. There are two lines, one downward, one upward. Tell me, yes, sorry. SPV issued what? Or PTS or security receipts worth present value of all installments. Listening. Type 1 examples I have given. Type 1, vehicle loans are pooled. Second one, general corporate loan. Next one, housing, like that. Similar loans of risk, term, etc. They will pool into one and package and sell. Or else, sir, mismatched loans you can't sell. Sir, one housing loan, one general corporate loan, how can you sell? Common interest is not there. So they will pool everything. So, see there, downward arrow mark. They will issue that in return. What these investors are doing? Subscribe to these mortgage-backed securities, which are in the nature of, this debt will get regular interest will come. At the end, what they will get? Very good. Next, who is he? Servicer, receiving and paying agent. What is the work of a receiving and paying agent? Fairly clear. Receive EMI, pay EMI. He will service the total debt. Okay. See there, arrow mark. From the borrowers, he will collect the transfer the EMI to SPV will transfer the principal part to principal, interest part to the interest. Listening, everyone? This is all the concept of securitization in India. This is how it will work. Okay. In a diagram, if you have to understand, this is how the securitization mechanism works. Up to here, everyone had clarity. Yeah. Now see here. Stage-wise analysis. Whatever I said now, these are all exam answers. Dead easy if you understand the previous part. 2 minutes each answer will be completed. Fastly let us complete. See the screen. First, stage-wise analysis. Stage 1. What we created? See there. Segregation of assets backed by similar type of mortgages. In terms of, similar means in terms of risk, term, maturity, etc. Next, transfer to pooled assets are transferred to a SPV. Next, SPV, what it will do to that backed with that particular value, what they will issue? SPV designs instruments based on nature, risk, tenure called as PTC or PTS. Next, fourth, administration. Administration of financial assets and collecting the loans from borrowers, transferring them to originator will be looked after by whom? Answer. RP is also called as what? Survey. Now, who is a Botsin batch? Survey is a Botsin batch. These are very important to recollect back. Administration. Lastly, if a default happened, in case of any default, by the debtors, receivables go back to the originator. And repayment? SPV will repay funds to the investors in the form of interest and principal from the assets pool. How much time it takes to remember this now? If you read this as a normal answer without having a background, it takes hours to remember the content. Just like that, it will be completed if you understand the introduction. That's what I said. 2 minutes each theory question will be completed if you understand introduction properly. Everyone understood up to here clearly? Next. Types of securities. Important question. What are the 2 types? Pass-through certificate, pass-through security. Risk is more in? Risk is less in? No recourse in? No recourse in? Recourse in? Bank is liable. Pass-through? Bank don't take responsibility. Answer over. Read. Originator transfers entire rights of financial asset, interest and principal from the assets sold. Thus, PTC represents a direct claim of the investors on all the assets securitized. All investors carry a proportionate benefit on cash flow. That means whenever EMI collected, on the EMI directly they will take money. Who will take money? Because they are having not just security now, they are having certificate that I am a owner of that particular loan. Directly from the EMI they will collect. Risk comes now, you only have to take risk. Read pass-through certificate. Please read here. In case of pass-through certificate, all rights are transferred to investor. The risk of NPA is also lies in the investor. To overcome this limitation, pass-through certificate, securities is introduced. Read. In PTS, rights on financial assets are reserved with SPV, and SPV issues mortgage back. EMI lo you don't have right. You have right on mortgage backed security. In our example, I have taken PTS or PTC. PTS I have taken. That's why what I issued to you. Mortgage backed security receipts. On the two portions are there. Number one. Number two, from where I will pay you? EMI. Pass-through certificate directly will collect from EMI. In our example, we are diverted through EMIs. But in PTC, you will collect money from EMI directly. Listening, everyone? Read. In PTS, rights on financial assets are reserved with the SPV. And SPV issues, what is MBS? Mortgage backed by restructuring the different tranches, pools from multiple financial assets. This structure also permits SPV to reinvest surplus fund for short term. Explained using a numerical example. Sir, what is this? I didn't understand. Third point you read. I didn't explain that. Read. This structure also permits reinvest surplus funds for. I will first ask you one question. Answer. PTC la PTS la what is the difference? Risk okay. Ownership also differs. PTC la you are having ownership on EMI. PTS la you are having ownership on the mortgage security but not on the loans. Listening, money cash flow will come to you through the EMI, but you are not having ownership on EMI. Listening, tell me, PTC, what is it? Pass-through certificate. It has how many portions? It has how many portions? Will not be there. They don't have interest and principal. Directly EMI they will collect. As and when EMI comes, they will take their money. Listening or not? If I issue MBS to you in the form of a security, then interest principal portion will come. EMI divisions will come. PTC la right on? Right on? Whenever EMI comes, sir, EMI comes from one borrower or multiple borrowers. In one pool, there are 1,000 borrowers. Everyone will pay EMI or not? In that EMI, my percentage. Sir, in our example, mutual fund has given 180 crores, 1 crore it has given. Answer. 1 by 180 means my portion will be there. Calculate 1 by 180, maybe 0.125%. 0.005 0.005 into 180 into, sorry, how much loan? 100 crores loan. Principal 100 crore loan, fair value 180 crores we have taken in our example. In that I have given how much? 1 crore. Means my part is 0.005%. Say for example, first month I collected 2 crore EMI. How much? 2 crore into that amount. 0.005% into 2 crore. How much? Tell in crores, yeah, total. Lakhs, no, some amount you should tell. How much? 2 lakhs, huh? Calculations, sir. 1 lakh? Sir, 1 lakh 11,000, some amount you got. Correct? That much I will collect from the EMI directly. In the principal, interest. Now, did you understand or not? I don't separate interest to principal in case of PTC. Directly EMI collected, my proportional I will collect money. Then what you read in the third point? All investors carry proportionate benefit on cash flows. Did you understand the point or not? You will get proportionate benefit on cash flow directly. But here you don't have right on cash flows. Once collected, I will distribute. Who will distribute? SPV. Listening, huh? Listening. Now, what is this third point is a question. Read. This structure also permits SPV to reinvest surplus funds for short term. How? What is this surplus? This you need to understand. No book in India has given a numerical example on that. I have taken from CFA level 2. CFL level 2 securitization is there in our syllabus. There one numerical question is there. That question I kept here. See here. This is how it look like. See there. Example. There are three types of loans. There are financial asset 1, 2, 3. One value is 100 crore. Two value. Three value. When I say these are all fair value of amounts already calculated. Interest how much? 5.1, 5.7, 5.3. All are having same interest or different interest. Reason is risk. High risk, high return. Low risk, low return. Term 34, 76, 88. Higher term, higher risk because uncertainty is more. Future, what we learned in capital investing here. When the future is prolonged to a long extent, risk is increasing or decreasing? Increasing. So, term on the basis of term also risk will be taken. All loans which are vehicle loans of 34 months are pooled. Like that you can understand. All housing loans of 76 months with the same risk are pooled into 300 crore. All corporate loans which are heavily risky taken for 88 months term are pooled into one set. Understood or not? Understood? Now listen. Totally how much? 100 plus 300 plus 600. How much? Now question arises. Bank will pool all, give to SPV. SPV on the basis of the 1000 they will issue security receipt. On the basis of 1000 they will give you security receipt. For 100, for 300, 600. Like that separately they don't do. They will consolidate everything and they will issue. No problem will come. In this 1000, some loans will give 5.1, some loans will give 5.7, some loans will give 5.3. How can it distribute to the investors now? I can't tell you take 5.1, you take 5.7. All are taking same risk. Are you understanding or not? We are all taking same risk. Yeah? Why you are giving 5.1 to him? Why you are giving 5.7 to some other? Listening? You can't do like that. Injustice. Therefore, I will give average. I will give. Tell me. 5.1, 5.7, 5.3. 5.1, 5.7, 5.3. There is an average or not? Add all these and divided by 3. Is a wrong. Like that we should not else adi chestarani. We should take weighted average of principal, fair value. We should take weighted average. See here. So, chudandi sir. See there. Interest received by SPV is called as what? Tell me, what is the interest on FA1? The mortgage rate. Next, the mortgage rate. Next, the mortgage rate. Listening? What I pay to you is not 5.1, is not 5.7, is not even 5.3. It's a weighted average. It's a okay. How much money is blocked for 34 months? 100. How much money is blocked for 76 months? How much money is blocked for 88 months? That also weighted average term. That means I will give security receipts or not. How much term I should issue? All are different terms here. One is 34, one is 76, one is 88. At what term I should issue? Weighted average term. At what interest I should give? Weighted average interest. This is how it will be. Finally, I am issuing at what rate? At a weighted average period of how much? Read now. Therefore, investors will receive 5.4% for 79 months. On some loans, I will receive even after 79. 88 months loan is there. And I am getting 5.7, 5.3, 5.1. I may get something excess, but I am paying only 5.4 or not. That excess amounts I will use it. That's what he is telling. Pass-through certificates, so pass-through security, that advantage is there for SPV. That balance, any excess is there, that excess they can use it for their purposes directly. Such a beautiful concept. So this is the concept of SPV and the securitization concept up to here. So tell me everyone, honestly, understood the concept up to here clearly? Yeah. Pass-through certificate, pass-through security, full clarity? Yeah. there is another security called as a stripped securities. Hybrid securities they call. What security? Hybrid security, also called as a stripped security. Stripping means removing. Okay. What they will remove from the total loan, they will remove principal and interest separately. Interest will be pooled as interest security. That's called as IO securities, interest only securities. That means you will get only interest portion of EMI. That investor will get. That investor will get interest only on that security. POS, principal only security, means in the EMI what you will get? Principal only security. But this is highly risky. Why? Can anyone tell me? You are just sitting and listening, na? You will not understand my pain. Tell me how much analysis we should do to make you understand. You should first know that. I will ask you one question. Tell me, IOS, POS, two types of securities are there. What is IOS? Sir, EMI la how many parts? Two parts ki I am the owner. But in case of IO security, I will get only what? Interest, because I invested less amount. I invested only. I believe that interest rates will increase in future because it's a floating rate. Then I will invest in IO securities. My speculation may be right, may be wrong. Now, RBI reduced rates. Gone. I invested on principal swap. I invest on principal only security. I invested on. Do you know what is the difficulty and risk of IO and PO? IO is risky. PO is also risky. Why IO is risky? Why? IO is risky. You should tell, I should listen. YTM in the market fall. What fall? YTM in the market fall. There is a drop in YTM. When YTM drops, you should tell. When YTM bond valuation knowledge. When YTM drop, automatically return recovery will reduce. Principal recovery will reduce. Return recovery will reduce. Which recovery? Interest is a principal, interest is a return. Answer. Loudly. Obviously your return will fall. And second thing, whenever listening, whenever there is a YTM fall, whenever there is a YTM fall is there, principal amount recovered also will come less. Correct or not? Principal recovery also will fall. Simply to tell, whenever YTM fall, whenever means market la interest rate is increased or decreased. People will listening everyone. Whenever market la interest rates are falling, people will pay these loans and take new loans at a lower rate, such that you will be repaid immediately. You don't have any great benefit. Interest only security, if you take floating rate interest, now whenever interest rates are falling, what will happen automatically? Gone. So try to understand clearly. Hybrid securities are stripped securities where you can either say purchase securities backed with interest, or you can purchase securities backed only with principal. I gave you a classic examples to make you understand. See there. What is the next security? Also called as, read once. Strip securities are created by dividing the cash flows underlying into two or more securities. Read. There are two popular types of security. Number one, interest only security, principal only securities. A holder of interest only securities receive interest part, and the holder of principal only will receive principal part. Since this is highly volatile, these securities are less preferred by investor. I explained the risk also clearly. See there. If two situations can arise, YTM can rise, YTM can fall. When YTM rises, what will happen? PO tends to fall as return recovery increases. Sir, whenever YTM rises, whatever rises, YTM is what? PV factor. YTM is what? I told you in capital budgeting. I told you in bond valuation also. Whenever you take a cash flow, hit it with the PV factor. With what name you hit it, that will get separated. Take a hit it with what name you hit, that will get. That's why first column year, second column, third column. PV factor is a return for us. With that you will hit. That's all. Return will be separated and invisible. What is visible is the balance of principal recovery. Balance of duration concept also morning I told you. Okay, now tell me, take a, hit it with what name you hit, that will get separated and principal will be separated. Correct? YTM rises. YTM? Loudly, YTM. When YTM rises, return recovery will increase. Then interest only securities are happy. But what recovery will fall? Principal recovery will fall. Then who will cry? Principal only security person will cry. Second, YTM. Not answering. YTM. When YTM fall, interest recovery will reduce, principal recovery will increase. Correct or not? So see there. First, YTM rises. PO tends to fall as return recovery increases and principal recovery decreases. Next, if YTM falls, IO tends to fall as return recovery reduces and principal recovery rises. Whenever YTM fall, what people will do, what borrowers will do? Borrower tends to repay the previous costlier loans and borrow again at a lower fresh rates. At that time, this particular PO will be happy, but IO will be unhappy. Therefore, what are the securities we read now? What is the name of the security? Hybrid security. You know all these now. Fatafat, 10 seconds we will complete. Who are all the participants in securitization? Tell the name one by one. Romba simple concept here. Tell me. First one. Second one. Obligor third one. SPV fourth one. Investor fifth one. Servicer. 5 parties. You clarity you know. These MBS are risky or not risky? MBS are risky or not risky? Not risky. But loan is risky or not? Therefore, credit rating person will come. Who will come? Person. And who is the person who will bring all these people? Director. Some person has to bring or not? Structurer. We call him as what? SPV is working well or not working well? Who will see whether SPV is really paying EMIs properly or not? Agent or trustee? Agent or? The trustee will take care of that securitization trust, whether it is really paying properly to the beneficiaries or not. Listening? Fatafat, 10 seconds each. Read. Who is the participant? Number 1. First, initiator of the deal, termed as securitizer. It is an entity selling the financial assets. Transfer legal and beneficial interest to SPV. Understood the concept clearly? Second, who is the second? Hero. Read. Also called as SPV. Created for executing the deal. Next, it holds a legal title on the financial asset. It holds a legal title on the financial assets. Next, it can be a company. It can be a trust. Next, main objective is to remove the asset from the balance sheet of the originator. Sir, it is going out of the balance sheet or not? Previously, financial asset is a loan and advance in your balance sheet. Now it became off balance sheet. That's the beauty of this concept. It issues MBS to the investor. Tell me, all the points you understood or not? Because of introduction. Sir, I am not joking. Whenever I said, options chapter I said, forex chapter I said, bonds chapter I said, again tomorrow we will start with IRRM. Then also I am telling, introduction is important. All this nonsense, problem answer, anyone can do. If you understand concept properly, all problems will become easy. Concept, if you don't understand, even if you do 101 problem is a problem again. So see, if you understand introduction properly like this, the flow will continue. So, next one. You know this. Sir, investors are of how many types? He can be buying PTC or he can buy a read. Investors are buyers of typically who are they? Mutual fund, provident fund, insurance company. They expect a return from the securities in the form of principal and interest. Next. These are all main participants. Now comes the secondary. 5 persons are there secondary. Read. Who is that? Who is the root cause of all these problems? Who is he? Borrower. Main root for entire securitization process. These persons, they have to receive money, they owe money. Owe money or assets on the balance sheet. Amount due from obligor is transferred to SPV, and hence on the basis entire securitization process starts. Receiving, you know, receiving or paying agent or not? Who is he? Also called as servicer. What he will do? Collect the EMIs and send it to the SPV. Therefore, they will send it to the investor. See there, collect payments from the obligor and passes to the SPV. Follow up with the defaulting obligors. Initiate the legal actions. Next. Just now I told you na, SPV whether working or well, who will oversee all these things? Read. Appointed to oversee the parties to deal or perform as per terms and conditions. Works in the interest of the investor. Credit enhancer. It's a small concept here. Listen. I kept what as a security? Asset as a security. Correct or not? House or vehicle or something. They have every chance to depreciate. Then who is responsible when the security values are falling out? They will enhance the security values. Means new assets they will add to that. Who will add? Originator, bank. Bank will tell that the main house which you have security that is losing its value, we are enhancing the credit value. That means a new house is there, one bungalow is there. Okay. This is also a security to it. Originally this is not a security. Now we are enhancing the value. It's just a more secure way of making the investments in securitization process. Okay, read. Since investors are subjected to risk and have only limited recourse to originator, this gives additional comfort in the form of additional security. Read. Structurer. Who is a structurer? Who brings the originator, investors and all other parties to a deal? They are normally investment bankers. Tell me how many parties we read. Here we read 5. Here we read 3. 8 party names. Fatafat, you should give the answer. Number 1. Number 2. Obligor. Sorry, SPV. Next, investor. Secondary. Obligor. Next one. Receiving or paying agent. Next one. Overseeing everything will be done by agent. Who will give extra securities? Credit enhancer. Next, last one will be. Very good. Benefits. You should only tell the benefit. Nothing great. Last 2 questions only there. Please answer. What is the benefit to the originator here after doing all this? What benefit you will get to the bank? So tell me, what is the greatest benefit that flows to the bank or a PFI? What is the benefit that goes to the bank or a PFI? For originator there should be a benefit. For investor also there should be some benefit. Okay. For originator, upon securitization, a portion of capital tied in the assets will be released, resulting in the off-balance sheet item and improved liquidity. As I said in the beginning of this chapter, whenever bank gives the loan, what is created? Financial asset. What is gone? Liquidity. If I sell that, it becomes a balance sheet item, off balance sheet. And what will come inside? Cash. So what is increased? Liquidity. That is advantage number 1 to the originator. Next. By transfer of financial assets, entity could even concentrate on its core business rather than concentrating on this junk fellow, whether he will pay or not. That will be taken care of by some other person. Happily, I can concentrate on what? I can do my banking business properly rather than concentrating on whether he will pay, when he will default, bad debts, all these problems will not be there. Next, especially in case of banks and financial institutions, it helps to manage capital to weighted assets. Sir, you know, current ratio in case of companies, current ratio they call, current assets by current liability should be 2:1. Higher current assets are required, higher higher current liabilities are required. Current assets, again 2 types are there: liquid assets, illiquid assets. Listen, stock is a current asset or not a current asset? Stock is a liquid asset or not a liquid asset? Not a liquid asset. Do you know why? Stock should get converted into debtor, debtor should get converted into cash. It takes time. Listening? Therefore, time is there. It is current asset but not a liquid asset. But not a. Now see, banks also will see the same. Bank gave loan to you. Loan is a financial asset but not a liquid asset, because loan will be recovered immediately over a period of time. But if you sell the loans, what will happen? It will get converted into what immediately? Cash. Therefore, your capital will rise. Cash is added to capital always. Next, reduced cost of borrowing since more money comes into the hand. That means, tell me, if cash comes in, I will ask deposits from the public. I will not ask deposits. That's why banks don't ask. They're having enough money. Therefore, they need not ask deposits from you. If they accept deposits from you, they have to pay interest to you or not. That I don't pay. When I am selling, I am getting cash. Reduced level of borrowings will be there. That's advantage to whom? Originator. Lastly, what is advantage to the investor? Sir, tell me, I am anyway mutual fund company having excess funds. I don't know what to do. Now I can buy secured assets or unsecured assets. Security is there. Direct government is giving security. Purchase of security is backed by different assets. Gives scope for diversification. More regulated environment because act is there, courts are there. Take care. In case of recourse agreement, tell me what is a recourse agreement? Don't say. I want to know what you understand. What is a recourse agreement? Whenever some default happens, what will happen? Who will take the risk? Bank. They will only take the risk and they will only make good all the loss caused to you. As I said or not? Same concept, sir. Read. In case of recourse agreement, if there is a default by third party, then originator shall make good the loss is caused. Risks in securitization, just read the side headings only. What are the risks in securitization? First one. Now the problem. Servicer is not performing well. Who is not performing? Then I can't recover the loans properly. I can't pay to them. Borrower default is another risk. First risk is. Second risk is. Sir, what is legal? There is no proper laws in India. Sir, you said SARFAESI attracts only when NPA come. Before NPA, SARFAESI don't apply. There is no law. Listening or not? That's secondary. In India, since this is recently developed concept, there is absence of conclusive judicial verdicts and provisions. Market risk. What are the market risks? Just now I told you. Market law YTM changes. These loan rates will change immediately. That's a macroeconomic. Interest rates is the next one. Last question. Problems in securitization. Let's read faster. First problem of securitization is what? Tell me. MBS. Do you remember or not? What is it? Bracket security. In the PTC, PTS. Two things. Did you remember PTC, PTS concept? Now tell me. PTS is security. PTC is not a security actually. It's a certificate. It's a that don't have stamp duty. PTS will have stamp duty. In various states, various stamp duties are there. Andhra Pradesh stamp duty 8% on PTS. Understanding? Some states are having as high as 12% PTS stamp duty charges. Means in 100 rupee, if I get a profit of 10 rupee, your stamp duty is how much? 12 rupee. Then how come the markets develop? That's a problem in India. Securitization is working well, but not like in Singapore and USA. USA and Singapore, securitization means it's a viral concept there. Why? Stamp duties are very low. 3% to meager 1%, 1.5%. 12% stamp duty, whatever the profit this person gets, you are eating the profit in the name of stamp duties. Listening or not? Read. First problem. What is the problem number one? Stamp duty is a primary obstacle. Please read the last answer. Under the Transfer of Properties Act 1882, it may even go up to 12% in some states. This damages the growth of securitization. PTC do not have stamp duties because it's a security or not a security. It's a certificate. Certificate don't have stamp duty. Security is an asset. If you Transfer Property Act will apply. Next. What is the next one? Problem is tax. Even till today, 2023 law also people filed complaints in the respect to high courts. Do you know what is the problem? Who should pay tax? Some people will argue that securitization trust has to pay as a representative SSE. As a income tax, there is a representative SSE concept. Section 160, subsection 1, class 5. 160, subsection 1, class 5. That's why I am telling separately. Okay. Just like that, I am not throwing section numbers. You can check. 160, subsection 1, class 5. We'll be talking about representative SSEs. Okay. Some arguments are going on saying that securitization should be ARC, securitization trust, should be taxed at a rate applicable to them under the category representative SSE. Some will tell that there are billionaires who are investing in the securities. Who are they? Investors. Tax them. Till now, even till now, 115 TA, TB, TC came. Those are exemptions given to them. Now, whom to tax is always a debate even till today. There is no proper clarity from the income tax. That's a problem number 2. Please read. Please read. This is another area of concern. There are divergent opinions where some argue that SPV as a trustee shall be taxed in representative capacity, and some are of opinion that investors shall be taxed. Accounting is another problem. Sir, problem with accounts I will tell. Whenever securitization process is completed, financial asset will be on the balance sheet, it become off balance sheet. Means it will be on the balance sheet, it will go away from balance sheet. But going away also requires accounting treatment. Don't just tell going away. How to go away? You have to record the accounting entries clearly or not. Problem, do you know what is the problem? 2 problems are there. You are telling it's a off balance sheet item. When it become off balance sheet, if you remove from balance sheet, what accounting entries you will pass? How to remove from the balance sheet? Number 1. Number 2, I thrown from balance sheet. From the bank balance sheet, loan went out. Recourse it came back. How to treat? Accounting treatments are not there properly. Did you understand the point or not? That's why. See there. What is the last point? Please read. Accounting. Read. Accounting and reporting of security as a securitization assets is another area of concern. Though it is a off-balance sheet item, it removes receivables from balance sheet. Moreover, it is furthermore complicated if it is on recourse. Last one, lack of standardized format and documentation, lack of well-established debt market, and lack of proper laws. With this, we completed this chapter called as securitization. Everyone understood the concept clearly? Yeah? Sir, if you understand intro properly, chapter can never become difficult for you. Every point you can understand. Just revise for 2-3 times. You will secure that marks. Okay. So thank you very much. Next session we will discuss about the remaining concepts.